Good morning, traders. It is Monday, August 11, 2015 at 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight news summary: European equities track lower in the session. Asian markets closed broadly lower. China's yuan devaluation, which was the most in 2 decades, occurred at about 8 p.m. Central, 9 p.m. Eastern last night, the impacts of which are overshadowing the agreement between Greece and its creditors. Greece and its creditors have gotten very close to a deal. China's data pulled down automotive stocks and luxury brands. Greek equities index up 7.3%. Resource stocks mixed in reaction to China. Gold is higher, oil is lower, and the U.S. dollar is higher versus the pound and yen and lower versus the euro. Big news from China. Fed's Lockhart last night says that he's disposed to September liftoff, but waiting a meeting or two won't be decisive to the U.S. economy. So you can see a softening there as the September date looms closer. Google announces reorganization of its operating structure, creates a holding company called Alphabet. Its shares are up 6% overnight. It's about all the news you can use, as they say. Let's look at what's on the calendar this morning. We're looking for U.S. wholesale inventories at 9 Central, 10 Eastern, expecting 0.4%. And at the same time, wholesale trade sales, 0.5%. That's all I see for today as far as the calendar is concerned, just 9 o'clock Central numbers. We do have the usual 4-week bills. We're putting out $40 billion. The U.S. Treasury is putting out $40 billion in 4-week bills at 10:30 Central, and $24 billion in 3-year notes at noon Central. Let's quickly switch gears here to the technical picture. Yesterday, I had to take care of some personal business, so I was not able to do a trader bite yesterday. When I looked at the market before I left in the morning, we were gapping up. The expectation yesterday was for an attempt at responsive selling back towards 2077, which was the high of Friday, 2077, 76, 75, 77, the high of Friday, and it's the point of control of last Thursday. So I was looking for some responsive selling towards that. Expected the responsive selling to fail. So we were targeting this yesterday, but the expectation really was for it to try to get down, but there was plenty of support. Was looking for it to fail to drop below 80, and then for it to start getting into the thin zone up here, and then to start moving towards 96. 96 was the target yesterday. I'll tell you why the 80 and why the 96 in a second. The market had an open drive right off the get-go, but the open drive quickly fizzled out. As you could see from this delta bar here, price and the delta were not moving in the same direction. The market continued to move higher, but delta was moving lower all afternoon, and it flattened out. As the market rally flattens out, the delta flattened out until these last 2 bars here, when the delta went positive. Very odd behavior yesterday. Whenever we see that, we look for a drop in the next session or two, and that's basically what we're getting here based on China's news. So that's what yesterday looked like. Overall, where we are, there are some changes that I made here. The last trader bite had me putting a a microcomposite around this area here. We went from the high to the most recent low, and we were looking at that microcomposite to figure out where we are. That's no longer valid since we are rotating about an even lower high. So what I did is I extended this microcomposite out to where it stops before this most recent high, the most recent high being the 850, 2108.50, and I've created this microcomposite yesterday from that 2108.50 high to the 2062 to see what we have in the shorter term range. Now, if we start to move up and out of here above the 2108, then I basically take this microcomposite, bring it back, stop it right there, and then extend this microcomposite out to see what's above. So just an adjustment in the way we're looking at the recent past, and that's basically where I get this 96, 98.50 target yesterday. It's the microcomposite point of control. And then the 80 comes from this CLVN right here, this notch out here. That's what I was looking for as a potential support to any selling on the gap up yesterday. Again, that didn't work out because the market did not have any selling in it whatsoever, even though the delta did move down all morning with price going up. Yesterday's rally was not impressive. I did not like the rotations at all in the trade. It did not. It's just one of those days where you just sit around and wait and nothing happens, or there's not much we can do. But it's very clear that the opening swing high, is at 92. The opening swing low is at the low a day. You could see the first reaction right here, and then from there we retested this opening swing high with the VWAP, and it's just these messy rotations all afternoon. I did not like the S&P at all yesterday. It just I didn't feel like it had a decent opportunity for me. Again, I'm not a swing trader. I'm a day trader. I'm looking for rotations to trade off of, clear rotations to trade off of, and I didn't like what I saw. Let's look at the overnight session. Quick overview. This is the overnight session on Sunday night that brought us into yesterday's session. Right here. This is the overnight session that brought us into the rally yesterday. You could see it bottom out here during the European Open at 74, and then from the European Open forward, we have this big rally, which ends up with a double distribution with a clear neckline. So when we look at yesterday's action here, you can see that there's a clear neckline right here in the upper distribution, and in the second distribution down, which has a point of control of 79.75 or 80, which by the way is another reason why I was looking for 2080 to be retested on the open yesterday. You could see that this is a pretty decent area of support that we're actually pushing into now. The low being 80.50 is not a surprise. I'm expecting this to float back up to 86 from here, barring any further news. But the China news showed up right here at 8 o'clock, 8 p.m., and you could see the immediate reaction as the Chinese devalue their currency, making the dollar more expensive. And then the market just basically sat in a box after that, and then it just had its continuation move just now, and that's what we're looking at currently. So above us, based on the overnight profile above us, there may be a zone of supply or resistance right in the 90-92 area. I'm paying attention to that area, and we've already tested the MC point of control. There's not much more to glean from the overnight session. The extended target above is again 98, 98.50. Remember, the point of control yesterday is in line. This point of control here, the pink line, is in line with the MC point of control down here. Those make sense. These represent the most traded prices, and I'm not including. Notice that yesterday's profile does not include, or the micro composite does not include yesterday's profile. It doesn't include yesterday's volume. That 98.50 pre-existed yesterday's session. So now we can just go ahead and include it, and we have a 98.50 still as the MC point of control. This morning, the market's trading right here. We're at 83. We're in the gap zone. There's a gap zone right here, and then there's a gap close right there, and we're trading inside of this gap zone. So I'm expecting turbulence here. There's good reason for both sides to be active this morning, the buyers and the sellers. However, I think if from the way this is shaping up, I'm looking for a test. Any tests into the prior day's range to be rejected. I'm looking to be a seller down below in the thinner part of yesterday's profile. I'm looking to be a seller. So if we look at it in the market profile sense, these single prints here, this excess low, I'm looking for any push into this excess low to be resisted for a rotation down to that 77 area, 80 and 77. Since we tested up, I expect that this morning we would likely test down. If the market opens and pushes through, pulls back, stays in range, stays in the 86, and then makes a new higher high, then my sell hypo, which is hypo 1, my sell hypo is off the table, and I'm looking for 98, 98.50 to be tested again. That would be the second hypo for today. But this morning it's hard to tell which way it's likely to open. Probably an open auction in range, and then I'm looking for it to either test the 77 area and reject and bounce to get back into the range, chop around, test up, which is the most likely scenario, test up, reject, fall, and then start to work its way down, close the gap zone, close the gap at 73.50, and rework this profile down potentially to the 67 area. So the first hypo is chop, 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 push up, find resistance anywhere between 86 and 90, and then move down to close the gap at 77. Close the gap zone at 77. Close the gap price at 73.50, and potentially push all the way down into the 67 area. That's hypo 1. Okay. Hypo 2, chop, 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 move down, reject, make a higher low, push into the prior day's range, chop, and then continue higher and go for 98.50 is the second hypo. I'll leave you with that. I know it's a lot to cover. It's a lot of talking. But you have a plan for the day. Again, the purpose of these Trader Bites is not to give you a plan that you trade off of. The purpose of these Trader Bites is really to have you look at this repetitive pattern, this repetitive habit of doing the same thing over and over and over every day, and most of all to come in with some sort of a blueprint of what you'd like to see the market do, so that when it's time to react, there's not too much thinking going on. Thinking and execution don't go very well together. You want to do your thinking pre-market, wait for the market to respond to your idea, and then push to execute your plan. Think of yourself as a fighter pilot. A fighter pilot does not pull out a map to figure out where the mission, the primary and secondary objectives are after he or she has taken off. They are looking at the map in the briefing room. They know their primary objective. They know their secondary objective. They know their targets of opportunity, and it's their job not to hold a straight line to those objectives. It's their job to follow their plan and then react to whatever happens, and always play from a defensive position, even when attacking, to always have a defensive position. Another analogy is a lot like boxing. You don't, just because you see a clear path to someone's jaw, to your opponent's jaw, does not mean you drop your other hand away from your face. You keep your hand up, you keep your defense up, you keep your risk under control, and when it's time to punch, you punch. There's no thinking involved. You see the opportunity that you've been training for and planning for, and you just go for it. This is trading. You're looking to play the probabilities over a large data set. As long as your risk reward is balanced and mostly risk, then over time, the statistical probability is that you'll realize your edge, and that's what we're after. Small incremental losses, and when the market hands you a good set of cards to play. Now moving to poker, when the market hands you a good set of cards to play, you play them hard. You don't just bet small, take your wins, and leave, and always hold your cards when you have a terrible hand. You drop your bad hands, and then when you have a good set of cards, you push them as hard as you can. Okay, and then over time, again, you play a lot of hands, and over time, your edge shows up in the form of a good expectancy or expected value. Enough about that. Good luck today, and I'll catch you tomorrow. Take care.